Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. Now is the time to buy, and a few reasons to be bullish on Bitcoin. So as usual, we're going to look at some charts, all that good stuff. Then we're going to talk about some reasons to be bullish on Bitcoin. And then some different news. Then at the end, we're going to look at some difficulties of some of the most frequently mined algorithm coins and evaluate that a little bit. So first and foremost, today, it was looking pretty good for a little while there. We had a nice uproar of price, if you will. It wasn't very long-lived. So the EMAs were looking up, but on their way down now. And that was looking at the 15-minute chart, but going out to the, even to as the 1-hour chart, they were just kind of barely going up there, and if you scale out a little bit more, they never really budged an inch. So it's interesting to think of what the price is going to get to. I don't think it's going to get much lower, because the lower and lower it gets, the more and more buyers are going to be tempted into doing just that, buying. And I can attest to that myself, because I've been buying into Litecoin. Every time it goes down 10, 20 bucks or so, I throw in a little bit. So again, yeah, we were up a little earlier today. Excuse me, got to go back. And we managed from about 110 almost to 125 in that shadow there, on the average about 123, and we're right back down to 118. So it was looking good today, and then everybody said, screw it. I'm just going to sell what I just bought for a few dollars, and made themselves a little bit of profit, but not too big a gains today. So let's take a look at the price of Bitcoin here. So we're looking at the all-time chart, and as you can see, we once reached nearly 20,000. CoinMarketCap shows a little less, the average of Bitcoin, but we did reach on GDAX there just about 20,000. Everybody just sort of averages it out, and now we're looking at about 6,800. So you can clearly see that this is the biggest dip of all time. Statistically, however, it is not. So take a look at this chart here. This is a pretty interesting chart. It shows the visualization of all horrific Bitcoin crashes. Not my own wording there. But you can see in January 12th, dropped 49%. And it shows the days that it was in a bear market, or the correction, if you will. So 16 days, 3 days. This one happened in just 3 days, down by 57%. But back then, the price wasn't that much to begin with. 33%, 35% there in 2013. So the biggest dip of all time statistically was 87% in November 2013. It was a 411-day correction. So it was just over a year before it actually finally returned to some kind of regular price, if you will. And then it just sort of went down from there. So, and the next biggest was 83% in 2013 as well. And now we're into about 70% dip. So it is statistically only the third, but clearly gross, it is absolutely the largest. So if you just say 20,000 down to 6 or 7 there, an easy 13 to 14,000 difference in just a few months' time. So why hold on to Bitcoin at all? Well, that's a good question that I think a lot of people are asking themselves right now. My answer is that the price should come back up at some point. Now, I'm sure everybody has said that over time, and if you take a look, at the charts here, at $1,163, it went down to $152. I'm sure a lot of people got out there, and I'm sure a lot of people were saying the exact same thing years ago, that Bitcoin is dead, that it was never worth anything. So another problem that Bitcoin has is that there wasn't, a lot of real-world adoption of it in, major industries. And I know some people fight me on that in the comment section. They say you can go out and get a debit card and load your Bitcoin onto it and spend it that way. And that's all said and good. So we can all bring up little tidbits of examples of real-world adoption. But in terms of the large scale of things, Bitcoin has not even been touched, and its actual innovation in terms of daily use is quite low. Admittedly, objectively, it is very low, its usage. So I do believe that it will come back up at some point. And also, you know, if Wall Street gets in on this, of course, it'll be regulated a little bit more. If Wall Street gets in on it, see, the thing about Wall Street is that they they take out the volatility of crypto, and I think the volatility is what brought a lot of people into crypto because, oh, I can get 100% gain in 3 days time. Excellent. Awesome. And that's what brought the whole impatient mentality that avoided the stock market and brought them into crypto. Because you can take a stock market example. I should have brought up an example here, but I didn't. But it's quite easy to do. You can just simply Google it and look at some stock market charts. Or if you bring up a stock exchange on your computer, either just download one or use a sample one or anything like that, you'll notice that things go very, very slowly. And do you like my example there? Very, very slowly. So we're talking like pennies at a time, and it'll go up and down, just pennies, and it's very boring in the long run. But when you have millions of dollars invested into something like that, it's a lot more stable, and the reason why it's more stable in Wall Street is because of the gigantic amounts of money. So if Wall Street took over crypto or put in their money into crypto or these major industries like that, as soon as it goes down $100, there's going to be millions and millions and millions pouring into it. And then as soon as it goes up $100, there's going to be millions and millions and millions being sold. So it always stays about the same, and it moves very organically and very slowly in the investment world with much, much more capital going for it. And that's why the volatility is sort of removed from the actual stock market as opposed to crypto, because there isn't enough money into it, and that's why it goes up and down, because there is a lot of AI bots, if you will, in crypto, that trading bots that automatically trade based on price, and there are people right there right now ready for every single little tiny dip of $1 or even pennies, and they'll just buy. So it's much more closely watched, if you will, and much more reactionary, maybe a better term for it as well. So real-world innovation, major innovation, innovation that we can't even think of right now. And let me give you some examples of that. So things that we can't think of right now would be like explaining to an 18th century farmer about a computer or the internet, right? You would blow their mind. They would have no idea what you're talking about. You would have to explain every single little detail to them. And even then, it would be very hard. Well, first of all, you could say, well, okay, the internet is where we all communicate to each other via electric signals. And they might be able to get that. Okay, electricity, I've heard of this electricity thing before. Isn't that with little wheels and the little Tesla coil, maybe, that I went to a science experiment once? Yeah, sure, that. And then, you know, you'd be like, well, you have a computer, and they'd be like, whoa, computer? And again, you can see where I'm going here, is you'd have to explain every single little detail to them. Well, it's this electronic device that, and then you'd be like, well, it all happens through your monitor, and they'd be like, whoa, monitor? And again, you can see where I'm going with this. So it's really hard to see the future. So, you know, another good example is like a Model T Ford. So the Model T Ford came along, one of the very first combustion engine mass-produced cars, if not the first. Whatever, my history in that is not that great. But either way, the example remains the same and relevant. So in a Model T Ford, you don't see a lot of them driving up and down the street today, do you? No? Well, why? Because they didn't understand the innovation that would be today then. They couldn't even think of these things. It didn't even occur to them to think of these things. Like, for example, you can't modify a Model T Ford to burn rubber, right? Well, if you put a whole new engine in it, but again, that doesn't count because it wouldn't be a Model T Ford engine. So it can't burn rubber. It just can't. In the traditional sense, you know, of hundreds of horsepower, right? You know, another thing the Model T Ford doesn't have is ABS brakes, anti-lock brake systems. Well, those are, you know, computer-controlled brake systems that squeeze the brakes, you know, hundreds of times a second or something like that, you know, to increase braking power and reduce slippage. Wasn't even thought of at the time. There's not a throttle position sensor in a Model T Ford. It just wasn't thought of at the time. There wasn't a catalytic converter, this, that, and the other thing. So that goes the same with Bitcoin in cryptocurrency right now. People are making cryptocurrencies, but if you look at a lot of cryptocurrencies, they're very, very vague. Like, what does Tron do exactly? Everybody has a guess at what Tron does, but nobody really knows. What does EOS do? Nobody really knows. They usually just send some kind of, on their front page, it's just kind of some jargon like, we've created the currency of the future that allows peer-to-peer transfer, blah, 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 and it's just all a bunch of blah, blah, blah that in the end really doesn't mean anything. If they knew what they were doing, they would write it down so that you know exactly what their plan was with it. But they don't have one. But it is important that we are making crypto now so that we can use this crypto and evolve it towards the future and create things that we never thought possible. You know, so a lot of things that we thought could have been possible a while ago, we realize is not possible now. Or things that we thought may have been possible now, it was just an inefficient idea. Here's an idea, you know, here's something I always think of when I see the Star Wars series. So, for example, there's an X-Wing, and it is chasing a TIE fighter, right? And they're shooting lasers at each other. Pew, 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 doing the pew, pew, pew thing. You know, little red lasers that shoot. And I've always noticed in those that, first of all, why are they combating each other? Why are they in combat so close, right? Modern warfare, we don't even fight that close anymore. Most modern warfare occurs at least 400 meters or more, except for city warfare, of course. But for example, you know, an M1 Abrams tank can take out another tank up to 2 miles away, or more, maybe. And so why are they so close to each other? Another reason I always wonder about is, why are they missing each other? Why do the lasers miss exactly? You know, it seems like they shoot in a straight line, and then the TIE fighter zips to the right, and it just barely misses the TIE fighter, right? And they keep shooting, and it's missing as they're juking through. So why doesn't the X-Wing have an AI system on it that just automatically targets things and shoots them? I mean, if you think about it, this is really far into the future, apparently, because they have spaceships and things like that. So wouldn't there be some kind of supreme AI inside of these ships that could just easily fire, just boom, 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 and destroy all ships in their area in just in one fell swoop and second? You know, it could just, you know, immediately turn the guns and boom, 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 and know how to lead it in a split second, because the AI is so good that it can lead the target instantaneously, right? And here's the thing, is that in the 80s, when Star Trek or Star Wars came out, and also, mind you, it has to be good for the movie as well, because you have to have drama and missing and juking and things like that. But if you think about it, in the 80s, we didn't have that kind of technology to begin with. We didn't have AI and these automatic seeking weaponry that we're just now kind of starting to produce. So we never thought of it at the time, that why do things even need to miss? Why do we need to combat each other at such close distances in the first place? If we have lasers and things like that, and missiles that can fire across the globe today, why not space battles that can shoot several astronomical units away, and the battles would be occurring, you know, half a light year away, because we can shoot lasers at each other and guide each other and things like that with satellites, or just why do we even have men in the cockpits? Why aren't they just controlled by AI firing at each other? Again, things we just don't think of now. And I know I went off on a tangent there, but I hope you guys kind of enjoyed that. So again, Bitcoin just hasn't thought of the innovations that we can be using in the future. So 20 years from now, crypto is going to be totally different, and it's going to be integrated in every little system that you can't even think of now. So that is one big reason to be bullish on crypto. Hold it now so that when it's used in the future. Is Bitcoin going to be around 20 years from now? Well, probably, but is it going to be the king of crypto as it is now? I actually kind of doubt it. I think there will be some kind of crypto that will be invented that will be much more user-friendly to the point where your grandma will use it, to the point, well, she won't even know that she is using cryptocurrency. That's the key. So let me read this article here. It says, sell off over. Bitcoin's price may be nearing the bottom. Bitcoin prices dropped to a 50-day low, 66.30 earlier today, but a glimmer of good news for the bulls is that the cryptocurrency appears to be nearing a bottom. To start with, Bitcoin tends to reverse course every time the relative strength index drops to or below, sorry, hiccups a little bit, 30. According to historical data, as of writing, the relative strength index is close to that mark at 32. At press time, Bitcoin is changing hands at 69.50 on Bitfinex, while the average price across leading exchanges, as represented by Coinbase's Bitcoin price index, is seen at 69.30. So looking at historical chart, Bitcoin repeatedly makes bull reversals after sub 30 drops on the RSI. So any price dips below 66.14 should be short-lived. The fact that Bitcoin has recovered from 66.14 to 7,200 only adds credence to the historical pattern. Further, the cryptocurrencies defended the ascending trend line as seen on the chart below. Now, I'm not much of a TA guy. I've made that abundantly apparent in numerous videos that you can sort of draw lines and do TA in any way you really see fit, and you can kind of turn it to your own narrative. And regardless if you agree with me or if you don't agree with me on that, that is my opinion, that you can kind of do it however you want, as long as you draw the lines, again, however you want. So chart experts tend to prefer logarithmic scale for volatile assets like Bitcoin. However, Bitcoin seems to be respecting the trendline support on the linear scale daily chart, as suggested by the rebound from 66.14 to 7,200. According to log chart, the trendline support was breached in February. So it's also worth noting that the ascending biased bullish weekly 50 MA is lined up at 65.76. Thus, Bitcoin may have a tough time breaching the strong support zone of 65.76, 6,600-ish at a time when the RSI is nearing a bull reversal zone. So death cross a done deal. Currently, the 50-day MA is located at 93.76, and the 200-day MA is seen at 93.47. So the death cross bearish crossover will likely happen in the next 24 to 48 hours. As discussed, the crossover is a lagging indicator and tends to come before a rise if the RSI shows oversold conditions. So it's likely a sell-off is likely to run out of steam in the range of 6,600 to 6,000. So again, as the price gets lower and lower, there are more buyers and more buyers as they see a good deal. And then once the price starts to really start to break that, you know, then more people tend to jump on. So when the price is really, really going up, people jump in. When the price is really, really going down, people jump off the ship. So it's too early to call a bull reversal, as the momentum studies is still bear biased, with the 5 and 10-day MAs are trending south. So nobody knows at this moment. I feel that it will turn around sooner or later here. Now, as you've seen in this chart here, we did have a 441-day correction from the 2013 to 2015, from November and January, respectively. So it could be a long correction, no doubt about it. We are definitely in the second longest correction. 48 days was at February 18th. So it's been longer than that now. So we could have several more months of this, and that's fine, because if that is the case, then that just gives you a lot more time to buy little bits of Bitcoin. One thing to note is that all the people that get in early in a situation like this are the ones that make money. So as you can see, the people who bought it at 2010 and bought Bitcoin at 30 cents are the winners today, as long as they didn't sell, of course, unless they sold at the high. Even if they sold it like $8,000, they're definitely still winners. If you bought in at 30 cents and you sold it for $8,000, wow, wow, wow. You know, I watched a video once of, it was a video that was dated in 2010, and it was basically just some really poorly made video, but it was somebody showing how to buy Bitcoin via PayPal in the year 2010. And it was at 30 cents at the time, and it was almost infuriating to watch it because the price was so low. And he bought, just to show the video, he bought $3 worth of it, so he got 10 coins for just $3. With the PayPal fee and the convenience fee of the website, it was like $3.38. Wow, you know, like how crazy, right? To buy 10 Bitcoin. So it just goes to show that those who get in at bad times, when everybody else is looking the other way and you get in now, those are the people who win. So those buying in mass right now, and if the price of Litecoin, say, goes back to, you know, $300-400, you are going to definitely be a winner for sure. There are a lot of people trying to buy little altcoins and things like that that are worth pennies or less than pennies, and hoping that they go up, to dollars or quarters or 50 cents kind of thing. So be it, all the power to you. But I try to stick with the majoritively the main coins, the most useful coins, the most solid coins, and sometimes that means a little less profit, but more often than not it means safety. And you all know, safety first, guys. Buckle up. So here's another one. So as per an article today on CoinDesk, so the cryptocurrency enthusiast, this might come as a welcome hypothesis with Bitcoin hitting a 50-day low at 66.30, though Godbull indicates that it's probably going to get worse before it gets better, speculating that Bitcoin will fall to the 6,600, 6,000 range over the weekend. And all the power to it. I don't want to lose money. I'm sure nobody wants to lose money, but if the price goes down, it's just a great time to buy. Investing in crypto coins or tokens is highly speculative. So the evidence from market analysis, according to Godbull, that's a weird name. Bitcoin tends to reverse course every time the relative strength index drops or below 30, as usual. So for the most part, this is the same article, but I kind of wanted to show you this. Hang in there. Only 18 more days of tax selling. So that said, if the market sees a... excuse me. So... this report also has a recent tweet from Digital Currency Group founder Barry Silber, in which he indicated that part of the renewed bear cycle stems from a sell-off related to tax season. So tax season, a lot of people sell off, and try to sell off their long-term gains and things like that, and then get their refund so that they can just do it all over again. Let's see here, find another good one. So, not dead. There's good reason to be long on Bitcoin, with Western Christianity set to celebrate the basis of its theology this weekend. Bitcoiners the world over might be showing up to churches in droves, hoping one resurrection might lead to another. So, talking about April, Easter, if you will. The ecosystem's main prophet, Tom Lee of Fundstrat Global Advisors, has outlined 4 reasons why enthusiasts ought to be bullish on the future growing trust in digital everything. So it's not looking, while it's looking bleak, Tom Lee believes there's good reason to be bullish on Bitcoin. So millennials are the largest single generation in history. So they are. Another reason is that trust in government is at 60-year lows. As you can see, this is a kind of a fun chart here where the trust of the government was highest just at the end of Kennedy's reign. And then Johnson sort of dumped it. Nixon, you guessed it, dumped it pretty bad. It was lowest during Jimmy Carter, or at least previously, and with good reason, because I wasn't really alive when Jimmy Carter was president, but I don't like Jimmy Carter. I don't like him. He's a little Southern guy, and I just didn't really care for him. Didn't have a commanding presence. Then it went way up with Reagan because, well, pretty much everybody loved Reagan for the most part. Not every president is perfect. He did some things that weren't that great. Did some things that were good. And then went down, up, down. And now it's at its pretty much all-time low. Although with Trump here, it's a little bit better than Obama, but not doing so hot. So that's a pretty big reason. So 92% of millennials don't trust banks. As a digital asset, Wall Street will be getting on it soon, maybe sooner or later, depending on whenever they feel like it, and that'll pump a lot of money in it. So I'm kind of on the fence about Wall Street getting into it. So on one end, of course, it'll pump up the price because they'll be pumping millions and millions and millions of dollars into it, but another bad thing is that they'll take away a lot of the volatility, which, again, in itself could be both a good and a bad thing. But the volatility is kind of what makes day trading, trading cryptocurrency pretty fun, because you can sell it one day and then 4 hours later it dips 10% and then pick it up at 10% less, and then it'll go back up by 10% and sell it. And so people that know what they're doing can make quite a bit of goods on doing that. So there's a lot of reasons to be bullish on Bitcoin, but I think my favorite reason is that sooner or later here, crypto will not go away. It doesn't matter if Bitcoin fails. It doesn't matter if Litecoin fails or whatever coin you hold fails. Of course, nobody really wants that because then we'll lose some money. However, crypto isn't going away. Either is blockchain. Crypto and blockchain is not going away. It's just not going to happen. It's the way of the future. We just don't know what that future is. And as I said earlier in the video, we don't know what it is because we can't think of it now. And later on, when the time comes, we will think of it. And slow innovation is the way it goes. In the same way that in the early 20th century, we didn't know that helicopters were going to be so useful in terms of all sorts of things, in terms of transporting, in terms of warfare, this, that, and the other thing. We didn't even think of them. We didn't know how to make them. We didn't know that you need an anti-torque rotor and this, that, and the other thing. Just like we were just barely getting into planes. So we needed to get into planes first, make airplanes properly, then start working on different things, then start working on different things. So it really goes in a phase, you know, and also necessity is the mother of invention. And it really is. So you don't create the hammer and the nail first. You need a reason for the hammer and the nail. When you take two boards and you put them together and you go, how can I put these together? And you're like, what if I take this thing here and I jam it in with this rock? Oh, wow. Okay, so I can stick two things together. Then you make the hammer and the nail. That sort of thing. You know, and humans are really good at that. Humans don't want to do things until they are required to do things. This has been, you know, over and over and over with all kinds of inventions that have happened until we need them. Just like when, you know, whether you believe it or not, I don't really care. But like global warming, I suppose, when temperatures rise too much because of weather or whether or not it's caused by humans, I don't know. I don't even want to get into that debate. But when it does, if it does happen, that's when we'll start getting on it, right? We're not getting on it now because we don't have to, right? And humans are kind of, we are curious beings, and we like to explore and invent things and do things that we don't need to necessarily. But a lot of the times, we just don't want to do it. And we're like, well, we could reduce CO2 emissions now, or we could wait 50 years. I say we wait 50 years. It's kind of like, you know, the dishes piling up in your sink, and you're like, I should do those dishes, you know? And then you're like, or I could do them after this TV show. That sounds like a really good plan. Not saying procrastination is a good thing, but just, you get what I'm saying. So recently rumors on ASIC, or an application-specific integrated circuit, have been floating around on the Ethereum scene. So I've been talking for this a little bit, for a little while here. And there he is, the world's worst MMA fighter. Get it? Because of the... there have been talks that the mining hardware developer Bitmain is planning to release the ASIC specifically dedicated to mining Ethereum in the second quarter of 2018. This news was responsible for the price of Ethereum dropping to its one-week low value and sparked debate among the crypto community. Although I don't know if this is particularly the reason that Ethereum is going down. Pretty sure it's because all cryptocurrencies are going down. Did this help? Probably not. But I wouldn't put that reason entirely on ASIC miners. And don't get me wrong, I really like this guy because he created Ethereum, which is easily the most useful of all cryptocurrencies. My favorite cryptocurrency is Litecoin, but admittedly the most useful one is Ethereum because it works great as a currency, works great as a store of value, and it works great as writing information into the blockchain, creating applications, things like that, smart contracts, what have you. Vlad Zamfir, an Ethereum developer, has posted a poll on Twitter asking, would you support a hard fork that obsoletes Ethereum ASICs? I think I actually responded to this poll. At the time of writing, 50% of nearly 7,000 respondents said yes, while only 13 said unequivocally that they would not support the fork. Mr. Zamfir clarified that he was just curious, and this was not a direct proposal. Even though ASICs are undoubtedly the fastest, most efficient way to mine cryptocurrencies, unlike GPU chips, they can only be used in a single application, and therefore even a small alteration in the algorithm of digital currency can quickly turn them from a money-making machine to a useless pile of metal and plastic. Just like I said with Monero, as soon as Monero forks, it will not be able to mine Monero because the algorithm changed very, very slightly, and the chip on the ASIC did not. So far, Ethash, which is used by Ethereum as well as numerous other cryptocurrencies, has been ASIC resistant, which allows the algorithm to be mined using only GPU chips, which I disagree with because all you need is an ASIC that has RAM with it, because most ASICs have very, very, very low memory, just enough to really operate themselves. But if you start to add a lot of memory to an ASIC, there's no reason that an ASIC can't mine Ethereum. Just like I think they have some Decred ASICs. Also, Bitmine development of Ethash, this ASIC seems particularly curious, having in mind that Ethereum has already publicly announced its plan to transition to a proof-of-stake algorithm. Such a fork would be unprecedented, as we've recently covered the privacy-oriented Monero fending off ASIC miners by implementing a software update designed to slightly change the proof-of-work algorithm to prevent DOS attacks by ASICs. Bitmain is by far the most dominant force in the ASIC market, with an estimated market share of 70 to 80%. Therefore, their development of mining hardware for new algorithms usually leads to heated debates about centralization, which has almost become a curse in the world of crypto, in the crypto hemisphere. However, recently there have been rumors that other manufacturers are trying to enter the market and offer their mining solutions to compete with the monopoly of Bitmain. This article isn't old, is it? No, because there already is a lot of other ASIC miners. There's Baikal, and then there's that, I think that Canadian one with the little miners. I can't remember what they are called. They only mine like at like 7.5 or like 8 terahash, and you can combine like 5 of them together. I'll remember as soon as I stop recording too. It's always the way it goes. So there you have it. Ethereum developers are maybe contemplating it. He said it's not a direct proposal, but he made that poll on Twitter, possibly for a reason. It was quite curious, and maybe they would consider it with the overwhelming respondents. So I don't know what the other response was, because if 57% of the 7,000 respondents said yes, while only 13% said unequivocally that they would not support the fork. I don't remember what the other options were for it, because clearly that does not equal 100%. So I'm pretty sure I voted on that post too. I think I've seen it. So let's talk about mining difficulty. We may have to reload these. Didn't seem to want to load the Ethereum one. Okay, there we go. So we're going to put these all to 3 months and kind of see what we're looking at here. Maybe just all brings it back a little bit more. Brings that back to about the 11th of December. And so with that one. So Ethereum has gone up quite significantly. So if we just take the, the initial values here, December, we'll look at the height of Bitcoin there, 1.7, and now we're at about 3.3. So about 2 times the difficulty increase. So not too bad, but we'll look at Zcash here first. So we're looking at 6.5 or so there, and now we're at about 10. So another doubling in difficulty since about 3 months back in terms of mining. So when you're mining, you're getting about half the coins that you once were with your graphics cards than you were about 3 months ago. That's another reason why mining profits are way down. The other half is the fact that cryptocurrency prices are way down. So there's really 2 aspects of mining that you have to watch out for. Is that your card still hashes at the same rate no matter what. Even a year later, it might degrade the card a little bit, but for the most part, it's hashing at approximately the same rate. It's just the difficulty has increased by about 2-fold within 3-4 or so months, and then you're only getting about half the coins, half the shares there that you once were, depending on how many people mining and yada yada. And then the other half is that the crypto price itself is less than half what it once was. And so you're getting about 50% or less of your previous value that you were mining at. I remember mining when NiceHash came back up and at the height of December, and I think my 1080, one of my 1080s alone, 1080, I think, was mining at about $8 or something like that, just one per 1080. So it was really good times, and it wasn't really meant to last. And most people knew that. Most long-term miners kind of knew that. So here's the Monero. So this one's kind of interesting because it's definitely more than double. So if we look back to December here, as far back as this particular chart goes, we're at about 36, 37 in terms of the difficulty there, just at that first value on the left. And, you know, if we look at today, it's down to 103, but it was up pretty high for a while there. If we take about an average of that 120 or so, it's up at about 4 times the difficulty, maybe a little bit less than 4 times the difficulty, and that's because of the Monero miners that were clandestinely mining Monero for Bitmain. So if you think about it, Bitmain produces these A3 miners, these Monero miners, and then they just put them up in a warehouse and start mining away, because why not? So when these were first announced, these miners were making about $220 a day with Monero. That is at the beginning of March when these were announced, if I'm not mistaken. I believe it was about the beginning of March. We'll just say that. So that's about 3 times the difficulty that it once was. So imagine if they made these about 3 months ago and then started hooking them up to test them. I gotta do double fingers. To test them. What do you think they were making then at the height of all the prices? They were likely making $500 a day per miner. Then when the difficulty was skyrocketed and everybody started to figure this out, and the Monero devs said, hey, I think we should do a hard fork now because there's some kind of mysteriously high difficulty chart going on here. Clearly somebody has ASICs, or there is some massive botnet going on. Turns out it wasn't a botnet, it was ASICs. And then they see that Monero is going to hard fork like that. So then they say, oh, we better sell these quick. They put them up on the market for a ridiculous $12,000. The people revolt. Some people bought them. I have no idea why. And then they brought down the price to like 7,600, and then it was like 3,000 some odd or something like that. So they just hacked the price all the way down when they realized that this thing would basically be a giant doorstop. Now, mind you, it mines the Crypto Night algorithm, the A3, and there are multiple coins for the Crypto Night algorithm, but honestly, most of them are indeed shit coins. And if you hold one of those coins, I apologize. I'm not like bashing you directly, but they're just followers of the Crypto Night algorithm. They are no Monero, let's say. So really, you're not going to be making that $200 a day that you've seen. Really, it's going to be like maybe 20, maybe 30 if you're lucky. Which, mind you, is not bad, but it's just not going to be anything remotely near what they were getting. So back in December, if they made these even before December, when this difficulty was a quarter of what it is now, they were likely making $400-500 a day, no doubt. And just know how many A3 miners they had. They probably had a whole warehouse section filled with them, probably hundreds or thousands of them all mining at once. So you can imagine how much money Bitmain made by mining all of that Monero. But I hope you guys enjoyed this episode, and I will see you guys next time.